Good afternoon, everybody. Welcome to the Making Money Trading Stocks and ETFs for the Friday before Memorial Day 2018. My name is Dennis Wilborn with the Active Trend Traders. I want to welcome you all. Thank you for joining us. Glad you were able to. Got to cover a couple of things and highlights, a couple of things that may go our direction over the next week or so. Interesting day in the market so far. I want to remind everybody that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. And then lastly, past performance is not an indication or a promise of future performance. Most of everybody on the line already knows me, and so welcome if you. But here's a little bit about what I do and how I've done it over the years. I want to remind everybody that the best trade of the year comes around about every 2 to 3 weeks. And depending on which side of the market you want to be on, this is absolutely a true statement. So our objective for today's session is twofold. One, timely actionable intel and also a review at the end of the week. We are currently in one trade that was put out to everybody. That's the JNUG trade. And that is just a free trade that I put out for anybody who wants to take that. Looking at gold getting a spike. We did a half position on JNUG. We'll do a real quick market review, stocks and ETF and their performance, and any bonus trades, and that was the bonus trade I was talking about. Here's where we're sitting as of about 9 o'clock this morning. As you can see, Dow was pretty weak this morning. And it's become just a real news-driven type of market, which accounts for the big swings. I mean, the swings down, the swings up, kind of nasty. Down from last year's high, slightly up on the Dow, slightly up a little bit, not quite 2% on the S&P. The NASDAQ composite and the Russell are, they're carrying the water for this year's stock market so far. And then active trend trading, we're doing well across all three of our strategies. We're sitting at about a 13% return. I anticipate and look for that to improve. One of the areas that I'm really pleased with is the strategy 2 and also strategy 1, but strategy 2 in particular. We're trying to generate somewhere between $500 to $1,000 a week worth of revenue in that particular entity, and we've been doing just not quite $400 a week, and so those trades have been working out really, really well. And that's basically doing directional spreads and also directional calls and puts for the short-term weekly options. Here's one of the items that is sent out every week to our premium members, and it's called the Go No Go table. And what it does, and it highlights on here, this Go No Go. If you ever want to try out the premium membership, this Go No Go table highlights the entities that we follow, and also where we're going to get into them. And I talk about that and put this out once a week on either Saturday, Sunday, sometimes Monday morning, but primarily I try to get it out prior to Sunday night, so that way you can review it, and it gives you an idea where I'm looking at taking action on individual the ETFs that we're following, the stocks we're following. And here's one right here, gold. As we were talking about, gold is down for the day, and that's okay. We're anticipating a pullback in gold. Talks about getting into the JNUG trade here about 1421. Currently, the JNUG sitting at about 1427. It's just kind of bouncing around, but at least we're prepped to be in it. And so that's one of the highlights that we do provide on a weekly basis. Let's take a real quick look at some of the entities that we are looking at. The oil ETF. Thanks to one of our members, he highlighted that oil, this USO, UCO, SCO, they basically come, when it's time to do taxes, they come attached to a a K1 is distributed to you before you can do your taxes. And so that can be a delay and also an added expense in doing your taxes. And so we're in the process of converting over to one of the entities that he found for us, and that is the oil exploration entity. Let's take a real quick look at that on a, what do we got here, weekly and a daily. Get the weekly down to where it's manageable here. There we go. And so this is the entity that this is talking about, and basically this is the S&P's oil exploration entity, and it moves dramatically, but it puts in really, really good patterns. It's kind of like moving sideways over the last, almost 3 years now, with the opportunity to, getting down into areas where oil may bounce. I'm not going to say it is, but yeah, with all the interest, what's driving oil right now? Well, of course, OPEC, Russia, they're coming out, with regarding producing more. Therefore, that's driving the cost down. The two ETFs that we'll be trading to go along with this is one of them is called GUSH. You gotta love the names they find for these leverage ETF. GUSH. This is the bullish side of the oil exploration. As you can see, it's dropped significantly. The runs that it goes on, like from the low high, from low high this year so far, what kind of a run has it gone on? Well, that equates to about 170, 180%. Now, I'm not saying we're going to jump on all of that, but at the same time, being aware with it puts in pretty nice little patterns. These little swings down here were, these were about 19, almost 20%. So something definitely to be aware of. Right now, correction mode. Eric, who suggested this stock, actually said, "Hey, called it to our attention there but I did not make it noticeable or known to all premium members yet, and so I wasn't going to go ahead and take the trade in it. But anyway, got a TSI tick up here on Tuesday, bullish engulfing." Turned out to be an excellent trade, and look at it. It ran. This is on the bearish side of this, about 24%. So I don't know if Eric took his profits on that or not, but these run really, really fast. They have great not open interest, but volume in excess of 1 million shares per day, and so that's those. So those are two of the ETFs. The leverage ETFs that we'll be replacing onto our go, no-go list and be trading those. One of the other ones we were looking at, and this is one that was offered to everybody, JNUG. JNUG is operating, and this is the bullish side of the gold miners leverage ETF. It's operating in this little uptrending channel. It was bouncing off of 14. We took a trade in here last week as it was just sitting there posturing. Started to move up. Now it's coming back and doing a little bit of a retest. We'll see if it pops on up. With the anticipation, it's going to drive all the way back up to the top of this this channel. We'll probably take a little bit of profit off if it hits about 1575 or so, or the top of the Keltners there. But that is a trade that was offered, like I said, offered to everybody in the room, and that was sent out as both an email alert, and of course, the premium members received their text alerts on that. Okay, let's see what else we got here. JNUG, and going with JNUG is JDust. And JDust, it's operating also in a little channel, but this channel is pointed towards the downside. Okay, as long as we're here, let's take a look at the SPY. Okay, with the spike top that we see, we had a bearish engulfing 4 days ago on Tuesday, and that bearish engulfing is still in effect on the SPY. Going along with that, of course, is you've still got an uptrend. The moving averages are moving in an upward direction. However, it is really pausing here with support 270, resistance just below the 275 level. It's not saying get short, but it's not saying necessarily get long. I would want to see it pull back more into the 50-day moving average or even the 20-day moving average towards the 270 level. If it really started to sell off hard, we can anticipate it going all the way down here to the 50 and this is the 100-day moving average, about 268. And that's where, long term, we would probably want to try to get long in the spiders, the Qs. Similar type situation, as you can see, also operating within a little bit of an uptrending channel. A couple of weeks ago, on the 14th of May, put it in a shooting star type formation, dropped the next day, which is the 14th. This is the 15th. Gap down, stopped almost on a dime at the 8-day moving average, bounced back up, couldn't get back to its past highs, and therefore now we're getting a nice little run back down. As you can see, the momentum on this little spike up not really coming into effect to try to push it higher. In fact, if it's almost to the point where if we drop a little bit more today or just maintain where it's at, we can almost consider this over here on a daily chart. We can almost consider this over here as a negative divergence over the last couple of weeks. And so where would we anticipate it falling? At least back down to the 167. It's only a $2 range. Last time it fell down to the 50, which will be about there. So then we're talking about 165, 166 on that potential drop. And that's where I would look at trying to reload on this. And I wouldn't necessarily reload on the Qs, but I would look at reloading on the TQQ, which is the leverage ETF on this. And again, it pulls back down into this area here, about the 52 level. That would be ideal, because right now this is just haphazard junk that it's putting out for us right now. Not really getting a break hard either direction. And sellers come in, buyers come in. Sellers come in, buyers come in. And it's just repeating that. Russell, which I'll just represent the Russell with IWM. It too, it has actually been kind of our strongest entity. It broke out above this level at the 160 level, came back and tested it yesterday, bounced back up. However, as you see, we bounced back up, but today's weakness, we get a close back below the 8. That will probably set us up to drop a little bit further. Where? At least to the 20, maybe even down to the 158. The 158 is where I think the Russell or the IWM becomes very interesting. And let's just throw a real quick little fib on that. Let's do it. Well, yeah, we'll throw a fib on here, from here up to there. And so as you can see, the 50% retracement is down here at the 157.50. If the 50-day moving average continues to run higher and we get a retrace back to the 1/3 to 2/3 level of that would put us right back at that 158 to the 157 level. That's where the IWM or the Russell gets interesting for a nice little pullback. Let's just leave that on there a second. Let's get this really confusing. Let's do an extension on this. Okay, what kind of symmetry are we getting on these? Here's a thrust. Here's a reaction. And as you can see, that thrust, that reaction actually hit 2 days ago. Hit it almost to the exact. Hit it to the Okay, well, it says here the high was 163.33. The high on that extension projection, 163.30. So it's amazing how these extensions and all that kind of stuff work, but they do work. And so it is in. So an anticipation of about 50%, 30 to 382 to a 618 retracement, not outside the. That's something that we could potentially expect. So that's what we're doing with that. Let's see what else do I got. Okay, that's for the next session. Oh, next Saturday, the 2nd of June, I'll be in the Bay Area. We'll be doing the Bay Area Moneymakers. We've invited to co-host with us the Silicon Valley Option Group. I'll be talking about generating weekly income and monthly income, trading weekly options, giving you some, providing several different strategies to be able to do that. But if you can make it, hey, we start at 9:00 a.m. on Saturday, and that's the if you're in the Bay Area, please come down and say hi and have a cup of coffee and a muffin. And so let's go back over. Let's see, did we cover? I covered all the stocks I needed to cover. JNEG. Oh, let's really just throw up. Let's throw up. I'm just joking about throwing up, guys. Hey, let's take a look at oil. Ooh. As you can see, oil appears like it is going to do a complete retracement all the way back down here to the $67 range, or this past breakout area, which is right about, right in this area, this little range right here. Right now, big sell-off on oil. If you're looking to short oil, wait for a pullback up into the at least the midsection of this candle. And what would you want to be, shorting? Well, you could always go, USO, getting a similar type of deal on USO. And so, big pullback to the 50 on USO. And as you can see, this was a gap down. And so how could you trade this? Well, you could either trade USO or you could trade SCO, which I believe is the flip side of that, on any kind of pullback down into this area, or go over and wait for drip to set up. And that's a way to play any more weakness on the oil on the oil commodity. Kind of interesting. So, yeah, what was the big deal on it? Like I said earlier, Saudi Arabia, OPEC, and the Russians putting their heads together to see how they could, let's call it what it is, manipulate the price of oil. So, okay, so that covers that. So here's what we're doing for the week. We talked about GUSH. We talked about DRIP. I'm waiting for entries on my ETFs and these individual stocks that I want to own. We're very much in a news-driven market right now, and so we're getting news-driven reactions like yesterday morning. Was yesterday morning exciting? Not if you were long a lot of different entities. So I hope you had some cushions and you didn't get and your stops weren't busted out. Strategy 2, we closed a position on BABA this week, picked up about $130 for the week, and then Leaf's position. We now have Leaf's position open on all of the entities. And I missed one here on Tesla because that was just open today. But we actually closed. Well, actually, we closed a position on BABA, picked up $157 there, and we opened a position on the June 1st for the spiders. Sold the calls on that. And as I said, my target $500 to $1,000 a week on strategy 2. And so far, I'm averaging about $385 per week since the beginning of the year. So, Call your attention, we're entering the seasonal zone for gold. And so somewhere between June, July, we will get a bottom in gold, and gold will launch into, it has the tendency to launch. It's not 100% guarantee. It has a tendency to launch into a big upsurge, okay, a thrust that lasts August into September, and sometimes all the way into October. So we'll be watching for that. NASDAQ seasonality, we're in that zone where NASDAQ could take off, but again, just watch it because this market is really kind of wonky right now. Russell, same thing. I'm really, Russell, yeah, it's given us our individual opportunities. It is the strongest of the entities as we speak right now. But in reality, October timeframe is when Russell, we want to be so paying attention to Russell in October to take advantage of the end of year tendency to move up stronger than any of the other indexes. So, hey, thanks for joining us today. Keep growing your egg. I hope these trays that I am putting out as freebies for this webinar and the BAM members, I hope that you're taking advantage of those. Keep growing the egg, trade wisely, trade profitably. Until next week, then we'll be doing the final hour at the top of the hour in about 40 minutes from now for premium members. See if we can see if there is anything we want to take into the long weekend. So happy Memorial Day, aloha, trade well, and prosper, my friends. And yeah, I'm one of these kind of guys. Well, that's not me. It looks a little bit like my dad, though. But God bless America, and also happy Memorial Day. God bless everybody. Aloha.